Hello friends. In today's video we are going to talk about procedure to buy government bonds in India. Government bonds are a safe way to invest, with fixed or variable interest rates and a set length of time. Interest is paid every 6 months or once a year, and when the term is up, you get the face value of your investment. The bond is backed by collateral and is the first choice of investors who want to take on little risk and get paid interest on their money without having to do anything. When the government needs money, it sells bonds, which are easy to buy on the market. The current yield on 10-year government bonds is 6.126%, which means that holding the bond for 10 years is a good way to make money. It changes depending on how much the government wants to borrow. There are also government bonds with shorter terms and lower yields. Also, you can buy government savings bonds, which have a 7.15% floating interest rate tied to the National Savings Certificate. Every 6 months, it is changed. Bonds can be bought at certain banks, such as HDFC Bank, Axis Bank, SBI, and ICICI Bank. How do you buy bonds from the government? Government bonds can be bought by small investors in 2 ways. Gilt mutual funds. Most people buy them through GILT, which stands for Government Securities Mutual Funds. When you invest in mutual funds, you have to pay an expense ratio, which lowers the return to some degree. The mutual funds buy Government of India bonds with their money. Mutual funds are a good way to diversify a portfolio. Direct investment. If you don't want to invest in mutual funds but want to invest directly in bonds, you need a trading and demat account at the bank. You can sign up on the stock exchange to take part in the bids. You don't need to look for a stockbroker right now. You can place the order on the exchange and buy the bonds, which you can then hold in your demat account. You could also buy government bonds from a stockbroker. You have to take part in non-competitive bidding to do this, but in this case, the bids of all the institutional investors determine the yield, and the bond allocation is based on the market yield. The low risk is the best thing about investing in government bonds. There is no chance of not paying back the loan, but the interest rate could change. The more sensitive a bond is to changes in the interest rate, the longer its term. Before you buy government bonds, you should think about the interest rates and terms. Make sure that the money that is locked up in the bond earns enough over time. Conclusion. Government of India bonds are a great choice for investors who don't want to take too many risks and want a safe investment. Alright, that's gonna do it for procedure to buy government bonds in India. If you enjoyed the video or learned anything, leave a like. Follow me on the YouTube channel and click on the bell icon to receive more updates.